Let's start with economy news as far as global markets are concerned. Let's talk about Indian markets first. Markets in India have opened in green once again, a day after they almost ended on a flat note. Markets in India, including Nifty and Sensex, both are trading in green. Nifty, as we speak, was up 10 points, while Sensex was up 52 points in morning trade. If we talk about other markets, markets across Asia are mixed currently. There is some relief coming from geopolitical tensions. That's why markets are behaving in this particular way. But one big issue, one big thing to be looked out for is the US Fed meeting that is taking place currently, and that will decide the interest rates. And that is one big global cue that will decide the movement of markets going forward. Let's take a look at the way markets are behaving now. Sensex is up just by 0.15%, nearly flat, and Nifty is up by 0.12%. Both are though trading in green, a good sign for markets. But yes, it's not a major gain also. Over the last few days, markets have gained tremendously. And we're joined by our market analyst for today morning, Mr. Ashish Andani. Good morning to you, Mr. Andani. I would like to first of all ask you, how do you see the trade happening today? What are the big factors to be looked out for?
The Fed will be the biggest point which has to be factored in the markets today. The Indian markets are flattish to positive kind of tone. Yesterday also we saw that the market were in the same zone. So I think the US Fed will be the major deciding factor. And also, I think the geopolitical tensions as the pressure eases off, the markets, global equity markets and Indian equity markets have also shown smart recovery. So I will be cautious to positive kind of bias on the global and Indian equity market both.
And also, at these levels, the markets are already very high. Any advice for investors or the viewers who are watching us and who want to invest in the markets at this current level?
The markets last 6 months have been, touching the higher high. So now it depends on the investor appetite and how long he wants to, stay in the market. If he's a longer term player or longer term investor, 15-20% here and there doesn't matter, because if you are looking for 10-15 years. But if you are a trader or maybe a short term kind of investor, so definitely it's a point of caution, especially before a big event globally. So I would the investor should take that decision based on how much time he wants to give into the markets. There are still some pockets like banking stocks, some of the PSU banking stocks are starting to look good. SBI is in a very good valuation. ICICI Bank on the other side, both the companies, the insurance arm is coming out with an IPO. So I think that will be a huge value unlocking. SBI, for one, I would be, keenly interested in if someone wants to take a long position, first because I told the insurance arm coming out with an IPO, and second, the way the NCLT and the loan recovery process in the country is going 2 to 3 years down the line, I think the stock SBI could double at least from here.